Intel stock was once known as the top dog in the semiconductor market, but I know in the past few years, most of us have been wondering if this stock had any bark left. I mean, the stock is down over 50% year to date during an amazing time in the semiconductor industry. Unfortunately, it is losing market share to AMD in various segments, and more importantly, is burning money with this manufacturing push. Luckily for investors, Intel finally let us know it was still breathing, even if it was a faint breath. Talking about breathing, I'm gonna hold my breath until you hit the thumbs up and subscribe button. JK, my Intel says I probably shouldn't do that. See what I did there? Intel. All jokes aside, in today's episode, we will do the following. First, reiterate my thoughts on Intel. Next, we're gonna take a closer look at that letter the Intel CEO just sent out. We just heard some updates on an AWS deal, a US government deal, and manufacturing updates. Unfortunately, some plants have been halted. So, a lot to cover. Let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Now, I want to start off with my overall thoughts, and my overall thoughts are pretty much the same of what I mentioned about a month ago when I did a video after Intel reported earnings. And in that video, I pretty much talked about how Intel is either going to go into two directions, and it's either going to be dead money for the next few years, or it's going to be a multi-bag winner, especially with the market cap of less than $100 billion and all the opportunities it has at its hands. And the only way it can be a multi-bagger is if it did execute correctly in all those avenues, mainly the manufacturing push and mainly the CPU push, and obviously some growth in the AI side. And in that video, I pretty much mentioned that I personally wouldn't be a shareholder of Intel at these levels, but I wouldn't mind if I was to play Intel, be in long calls, very out the money and very long in time. Now, I'm sticking by it, and again, a lot has to happen for that to stay. But today, Intel did have a great day. The stock was up 6%, and after hours, the stock is up roughly 7.8%. So today, on September 16, Intel CEO Pat Gelsinger did send a message to employees. And obviously, I think it came at a great time because he mentions it pretty well at the beginning of the letter that since Q2 earnings, there have been no shortage of rumors and speculations about the company, especially after last week's boards of director meetings, where we have been hearing rumors that Intel's going to sell its foundry business, that Intel's going to sell its CPU business. There were so many rumors floating around for Intel. So I think as a CEO, not only for investors, but you also have to kind of make sure your employees understand where the company is. If employees start to question a lot or kind of don't see a steady pace for the future for the company, then they start to leave. So I mean, obviously Intel right now might be losing talent, but you don't want that to continue. So I think it was a great move by Pat Gelsinger to kind of bring out this update to Intel investors. And pretty much Intel CEO mentions that there's three key takeaways from the last week's meeting that he wants to focus on. First, they must build on their momentum in foundry as they near the launch of Intel 18A and drive greater capital efficiency across this part of their business. So it seems like Intel really is focusing now mainly on their advanced manufacturing and maybe holding off on some of its specialized nodes. The second thing is, unfortunately, they must continue acting with urgency to create more competitive cost structure and deliver the $10 billion in savings target they announced last month. So we're going to see how they're doing that. And finally, they must refocus on their strong x86 franchise as they drive their AI strategy while streamlining their product portfolio in service to Intel customers and partners. So pretty much we kind of got a top level overview of what Intel is really focusing on. Now, the first big news, and I think again, the main reason the stock price is up is there's a lot of great news here, but it also eliminates a lot of the rumors and uncertainties happening in the market and appearing for Intel. Because the worst thing as investors in general is not knowing what's going to happen, and uncertainty creates a lot of volatility. So now one of the big deals that they announced today is with Amazon Web Services as they select Intel Foundry for various solutions. So today they announced that they are expanding their strategic collaboration with Amazon Web Services, aka the AWS, and this includes a co-investment in custom chip designs, and we have announced a multi-year, multi-billion-dollar framework covering products and wafers from Intel. Now, for those that are not familiar, Amazon and Intel have actually been working really close together with kind of their own custom CPU solutions. So we can see here on August 2nd of 2023, I've actually covered this in this episode, that Amazon actually has a custom 4th generation Intel Xeon processor that it uses on its AWS solutions. So I'm pretty sure this is how we're going to continue to see this partnership with custom processors for AWS. AWS mentions that this is up to 15% better performance over comparable x86 based Intel processors utilized by other cloud providers. So I believe this is going to be the partnership that they are discussing, where Intel and Amazon are going to continue to develop custom chips designed for AWS solutions, which is obviously going to provide a better performance and price solution compared to some of its competitors. Now, what was even bigger to this deal is Intel Foundry will produce an AI fabric chip for AWS on Intel 18A. They will also produce a custom Xeon 6 chip on Intel 3, pretty much just what we discussed, that builds on their existing partnership under which Intel produces Xeon scalable processors for AWS. More broadly, they expect to have a deep engagement with AWS on additional designs spanning Intel 18A, Intel 18AP, and Intel 14A. And now we actually have two big players with Intel's Foundry for their 18A. I think we have Microsoft and now we have AWS. And I keep saying we like I'm an Intel shareholder, but overall, just for the sentiment of the video, that's how I'm going to be discussing it. But obviously, this is very, very big bullish news. And I mean, at the end of the day, if they're working here with Intel on 18A, there's probably going to be a huge success if they do well on Intel keeping these customers for 14A and further. And I think this kind of showcases where Intel believes that they're getting huge opportunities in their advanced nodes, and maybe that's what we're going to see in the upcoming slides, that Intel is kind of slowing down in certain aspects and is mainly focusing on its advanced manufacturing nodes. So I think this was a really, really big win for Intel, and definitely deserves the overall price action that is seen right now. Now, the second news that we're seeing is earlier today, Intel did announce that it has been awarded up to $3 billion in direct funding under the CHIPS and Science Act for the US government's program. And this is where the United States, Intel, as the only American company that both designs and manufactures leading edge logic chips, will help secure the domestic chip supply chain. So Intel is going to be developing and manufacturing chips for the United States government under this program. And I think this is a big win as well for Intel and their foundry push. So right now we're continuing to see more wins on the foundry market, which I believe is going to be the biggest opportunity for Intel. Again, the foundry market is that market that is either going to burn Intel a lot of money or make them a multi-$100 billion company. And right now it's definitely moving into that direction. Now, it's Intel's job to deliver, right? Just because we have these deals doesn't mean it's going to deliver. We have to make sure it delivers. And if it does deliver, it's just going to recreate the cycle of those customers ordering more and more and more. So right now, it's definitely all in Intel's ballpark, where they have to deliver 100%. And here, obviously, the United States is definitely wanting to build manufacturing in land or domestically. And right now, Intel is pretty much the best solution, as it is a US company. It is a US company that designs chips, and it is a US company that manufactures. So I think the United States government is doing well by making sure this company stays living. Now, is that how do I see that as an investor? That's a whole completely different thing. But it's definitely a big move for the United States and for the semiconductor market here in land. Now, the final thing the company talked about was its foundry business, and its foundry business kind of got broken down into two segments. First, Intel is establishing the Intel Foundry as an independent subsidiary inside of Intel. So it's not selling off its aspect, but it's really kind of completing that independence between Intel and Intel Foundry. And the main reason is they say that this will unlock important benefits. It provides the external foundry customers and suppliers with clear separations and independence from the rest of Intel. Importantly, it also gives them the future flexibility to evaluate independent sources of funding and optimize the capital structure of each business to maximize growth and shareholder value creation. I think that was another big move. Overall, there is going to be no change to the Intel Foundry leadership team, which continues to report to Pat Gelslinger. And they've also established an operating board that includes independent directors to govern that part of the business as well. And that makes perfect sense, right? Because you don't, I think that's actually the biggest improvements here as well, is now you have two board of directors, one to really focus on Intel's CPU business and kind of their technological and chip design, and then you're also going to have a board that's kind of focusing on the manufacturing side. And both of them having the same board for those two businesses might not have been the best place, but now having independent boards there will definitely help accelerate both businesses even faster. Now, to make sure that they continue an efficient foundry manufacturing build out, Intel recently announced that they were gonna build various projects in Europe. Unfortunately, some projects in Europe had been halted. That's going to be the one in Poland and Germany. And I think this is actually a great move because I know the one in Germany was going to focus more on things like automotive chips, which isn't necessarily advanced nodes. So it seems like Intel at the moment is really focusing on Intel 18A and below. And that's pretty much the Ireland plant, which will remain their lead European hub for the foreseeable future, and obviously all the plants here in the United States. So Intel mentions that there are no changes to their manufacturing locations in the United States. They remain committed to their US manufacturing investments and move forward with their projects in Arizona, Oregon, New Mexico, and Ohio. So again, right now, Intel is really pushing into two aspects. One, the United States aspect, which I believe is the smartest move. I think Intel really only needs to be a US only business, and it can really grow and grow shareholder value like that because the United States is really spending money here. The second thing is it's obviously focusing on advanced nodes, which is obviously going to do well for their personal CPU business, but obviously for the AI market as well as we continue to advance in AI chips. So overall, those are the main updates I wanted to share for Intel shareholders. Again, I believe this has been great news for Intel stock investors. If I was an Intel stock investor and bought in the 20s or high teens, this would be reasons that I would continue to hold the stock, as there's a lot of growth opportunity. Regardless, like I mentioned at the beginning of this episode, for me, I think Intel, while all this news is great, it's going to take multi-years for us to see really true results of Intel 18A, for us to see more results on these partnerships and these manufacturing push. So while we see some great reactions right now, I think in the long term, Intel might still be a little bit iffy, where I personally wouldn't like holding shares. And like I mentioned, how I would play the stock. I believe either Intel is going to be dead money or a very, very big winner. Market cap less than 100 billion. Intel definitely has the opportunity, but it has to deliver. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.